It's a mess for DOT. The bad news has been piling up since the start of the summer. At the current rate, Polkadot will collapse in 2 years. The community is worried about spending. Polkadot is in financial trouble, at least that's what the media are saying. And what if they're hiding something from you? Something so important that it would call into question all the articles in the crypto media? In this video, we'll give a precise analysis of the price and reveal the 4 decisive elements for the future of Polkadot. In the course of the video, I'll reveal the data we've been hiding from you, which will confirm whether Polkadot will go bankrupt or do its bull run in a few months' time. Like Solana, Tezos, Cardano, and many others, Polkadot has its own blockchain. While all the projects claim to be the new infallible crypto, Polkadot is in fact one that stands out from the rest. The DOT teams are aiming to be the first Layer 0 blockchain. All Layer 1 and Layer 2 blockchain projects have many similarities, but work in isolation. Polkadot enables all these blockchains to be connected to each other and to cooperate, which is called interoperability. This is the major problem solved by the Polkadot blockchain. So we have a blockchain that allows others to link up via its network. That's a real benefit. So far, nothing transcendent, but now we're getting to the heart of the matter, with the first decisive element in Polkadot's future. Despite a stagnating price and numerous expenses, is the company making money? The answer is yes, and not just a little, as shown by this graph tracking Polkadot's cash flow. The first and most important data point is the company's revenues, symbolized by the red line just here. These revenues have been growing since 2020, despite the bear market of 2022. We can even see that the gap between the revenue and expenditure curve has widened since 2023, which means that the company is generating more money than it is spending, and is therefore making a profit. It can be clearly seen here that it was from March 2024 onwards that spending spiked. But where did all that money go? According to this CoinDesk article, Polkadot spent nearly $87 million in 2024 on its development, particularly in marketing. So we have a crypto that continues to evolve and has a real roadmap for its development. And that's what every investor wants to see. We've seen that Polkadot generates money and spends it on its developments, but what's really happening with the developments underway on blockchain? According to the Santiment website, business development has resumed and is in line with Polkadot's expenditure. You can follow the development of the activity by this blue line right here. It's very positive to see the divergence between the falling price and the increase in business. This shows that project sponsors are continuing to develop their blockchain. Let's move on to an analysis of the price and the metrics, which will reveal the last 2 decisive factors for Polkadot. In weekly, we can see that we are flat. Polkadot only experienced a bull run in 2021. Here, the bear market of 2022, and a nice little retracement last winter with a profit of nearly 200% right here. Zooming in on the graph, we can see that we have just gently taken the last weekly low. What would be optimal is for the $3.58 price not to give way, to create an ascending crew, a typically bullish structure. Even if it is broken, this is not necessarily negative and can be explained by price manipulation aimed solely at taking liquidity. This is the 3RD element that explains why the DOT is currently falling and is less strong than the other altcoins. This element is DOT liquidations, which reveal where the price zones are where traders betting with leverage get closed out. A quick explanation for beginners. Anyone can buy cryptos using leverage. That is by borrowing from the platform 2x, 5x, 10x, 100x, or more of the amount you wish to bet in the first place. If you bet 1,000 euros with leverage x 100, the platform will lend you 99,000 euros for a total of 100,000 euros. You will therefore make 100x more profit, but also 100x more loss. On the platform side, they won't let you lose their money and will close the trade at a specific price level as soon as your initial capital has been lost. A leverage of x5 exposes you to a close at a 20% variation. A leverage of 10 exposes you to a close of 10%, and a leverage of 100 exposes you to a close of 1%. These colored areas on the graph represent the price levels where the most traders are getting stopped out, and the price is constantly moving towards. The most important areas. The more yellow the zone, the greater the total amount of money lost. As can be seen clearly from the long-term liquidations, The last zone was at the current price of $3.75. It is therefore quite possible that we are simply witnessing a hunt for liquidity. The project is generating revenue. Blockchain developments are continuing, and the current drop in price is caused by liquidations by leveraged traders. But what is there to confirm that these are just liquidations and not a massive exit by Polkadot investors? We'll find out in the element, which will give the final trajectory of the Polkadot, with a bonus fifth element. Just before we get into that, you should know that most of the data we use is paid for and expensive. If you'd like to use it for your favorite crypto, subscribe to the channel and mention in the comments which crypto you'd like to see in our next videos. The penultimate key to determining the future of DOT is whale behavior. What are the big wallets doing on DOT? According to our sources, there are around 50 of them and 31 of them are on Dropstab. We can see that despite a token purchased at 29 cents, the whales are not selling. So ask yourself the right question. Why wouldn't a whale sell a falling token when it is currently making a profit of around X13? This fact is amply corroborated by DOT's list of holders, which has risen steadily since the market bottom in December 2022. A small but important detail is that this curve only represents investors holding at least $5 million in DOTs. So we can safely assume that whales are currently accumulating a huge amount of DOT. Bonus 5. What would be the price targets in the event of an uptrend? We find ourselves on the daily price, which is the best time frame for cycle targets, whether bullish or bearish. What we're looking for are areas where liquidity is taken, followed by imbalance. Basically, a zone in which a top is followed by a price imbalance. What we also like is to see these targets coincide with the mathematical targets obtained using Fibonacci retracements. These 5 levels, 0.62 to 0.94, represent the optimal retracement targets, and we can see that 0.79 matches up perfectly with the $42 target. For short-term and medium-term targets, depending on the liquidity, we can see that in the short-term things are piling up enormously higher. The major cluster is between $4.20 and $4.35. We can also see that we took the long cluster in the $3.80 area, just here. So we have everything we need to bring about a change in price dynamics. In the medium term, the 2 most obvious clusters are in the $8 and $11 zones, which are the minimum targets for the DOT. In view of the target, which is more than 10 times the current price, we remain very conservative on the price trend for the time being and are looking more for a major retracement than a new AT8. However, it is the violence of the next bull run that could call this theory into question, and we will be updating the DOT again with more precise targets during the bull market.